right, everyone. Hello and good morning. It's great to have everyone back. And this is the daily currency call with Forex Trading Asia. If you are new to the call, a big welcome as well. And thanks for joining us again too. So guys, this is the daily currency call. It is episode 370. It's the 7th of September. And if it is your first time here, just a quick introduction to the call. So we do the currencies as follows. So on Monday, Aussie and Kiwi. Today, Tuesday, we do the Euro pairs. Wednesday, pound. Thursday, yen and gold. And then on Friday, we do the CAD and crypto, specifically Ethereum and Bitcoin. So this is the currency call where you'll get economic updates, key support and resistance levels, trade ideas, and of course, much more. This currency call is going to be very beneficial to both the long-term investors and the short-term traders. And here we'll go through what could move prices, possible trade ideas, and we'll also highlight the potential targets and risks as well. A disclaimer here, so please understand that any information shared during this session is not intended to be a trade recommendation. It is solely just the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So to start off today's call, guys, we do have Kim Hong, currency strategist for LCMS traders, and he'll be discussing the upcoming Bank of Canada rates decision and statement that is released tomorrow. So Kim Hong, thank you again, and it's all yours.
All right, thank you, Scott. Yep, from one central bank to another, okay? Tomorrow at 2200 GMT plus 8, we will be hearing from the Bank of Canada, okay? So during their previous meeting back in July, okay, they actually carried out a tapering of their quantitative easing, okay? Reducing QE from 3 billion Canadian dollars per week to 2 billion Canadian dollars per week, okay? Now, also take note that this year, 2021, they have already carried out QE tapering twice, okay? The other time being back in April, okay? So twice already, okay? That's pretty hawkish, I would say. They're on track, to the policy normalization, okay? So what should we expect from the central bank tomorrow, okay? Personally, I feel that they are not going to do anything, okay? Meaning they're going to keep policy unchanged, okay? Monetary policy unchanged. Interest rates will be held at 0.25%, okay? QE will proceed at 2 billion Canadian dollars per week, all right? So you guys may be thinking, maybe wondering like, why is that the case, right? Why is it that the Bank of Canada is not going to further taper their QE, right? So they can, go towards policy normalization faster, earlier, right? So I have 3 reasons for this, for my views, okay? The first reason is because of softer economic growth, right? So for some reason, okay, Q2 GDP, the Canadian Q2 GDP was actually negative, all right? So I think it was negative 1.1% for the annualized GDP, quarterly GDP, okay? So unlikely the Bank of Canada is going to feel good about this figure, all right? Also take note that if the third quarter, which is right now, okay, if the quarterly GDP is going to reflect another negative value, then Canada's economy will be in technical recession, all right? Because technical recession is defined as a situation whereby 2 consecutive quarters of negative GDP, all right? So something to take note there, all right? Softer economic growth. Second reason, okay, COVID cases. So I think I'll just show you guys the number of cases, okay? Where is it? Okay, so I think back in July when they actually tapered, right? We can see that COVID cases was actually declining, right? From some 7 over 1,000 cases in May, dropping all the way down to 3 digits, okay, 7-day average of 700 over 600 over cases, which is why we see the Bank of Canada acting so hawkishly, right? So they believe that the economic recovery is on the way, all right, is underway. So, they carry out another tapering. Now, however, post the meeting in July, okay, we can see that from here on, starting from August, there's actually a steady rise in number of cases. Right now, we are seeing 4-digit cases on a daily basis in Canada, okay? So highly unlikely that, the Bank of Canada is going to be more hawkish with this whole COVID cases rising, right? Okay, so that is the second reason. Now, the third reason, not sure how many of you are actually aware of this, but the Canada federal election will be held on 20th of September, okay? So we may be seeing a new PM, we may not, because there are words out there that, saying that the current Prime Minister, Justin Trudeau, he's actually likely going to secure, another seat, okay, another term as the Prime Minister, all right? So with this whole election, with this ongoing election, okay, this month, the central bank is unlikely want to, carry out any changes. Instead, they might want to actually hold on until the next meeting before considering further tapering, okay? So my first point being the softer economic growth, okay? I would like to bring you back to the policy statement being released during July, okay? This, I think, it's one of the most important part of the statement. Decisions regarding further adjustments to the pace of net bond purchases, which is QE, will be guided by Governing Council's ongoing assessment of the strength and durability of the recovery. See, strength and durability. Yes, we have seen the strength of economic recovery previously, all right, which is why the central bank carried out another round of QE tapering, all right? But the durability is definitely not there. Okay, as we can see that, with the rise of cases, we may actually see another quarter of negative economic growth, okay, resulting in a negative GDP figure, right? Hence, technical recession. So at the moment, the central bank, Bank of Canada, is unlikely going to carry out more tapering. I mean, to be honest, they have more time. Since last year when they started tapering, okay, down from 5 billion Canadian dollar per week to 4, and then to 3 and to 2, you can see that the pattern is 1 billion Canadian dollars worth of tapering, right? So if the tapering rate were to be consistent, then we can expect 2 more rounds of tapering before the Bank of Canada is done with this whole QE, all right? And they will be looking forward towards the interest rate hike next year, probably late next year, right? So it's actually quite a speedy progress in terms of monetary policy, okay, from the Bank of Canada. So yeah, they have plenty of time, and they are likely going to just wait and see, adopt a wait and see approach and see how this whole COVID case handling goes, before carrying out any further tapering, all right? So with that, if there's any changes and things like that, yeah, I will update you guys again on Thursday, okay? I'll hand it back to Scott.
All right, thank you so much, Kim Hong, for that as well. And guys, the RBA rates decision and meeting is today as well. And if you didn't get a chance to watch that video as well, what I'll do, I'll make sure I post that video. It is coming out in just over an hour, so there is still a bit of time to get your head around that. I'll just quickly post that now in the chat. So make sure, you feel free to ask questions as well in the chat too. If you hear something that you're not too familiar with and you're a little confused, we're all happy to help as well. So let's get into the US dollar analysis now. So I'll get the chart up here thanks to Sam Trade. So I was just watching this as Kim Hong was talking, and it's definitely a point of interest where we are currently moving. So we did have the Labor Day public holiday yesterday in the US. So that just meant, markets were pretty uneventful. And really, if we have a quick look at the economic calendar with Forex Trading Asia, we can see that it was, relatively quiet. And then for today, for the US dollar, it's, quite clear again. So we are back down at a very interesting level, close to the 92 flat support zone. And, price is stabilizing here. So from a trade perspective, if you are in positions and you're a little bit unsure, especially if you might have a little too much risk on, really honestly, now is probably the time not to be doing that, because there is a degree of uncertainty in the markets, and we could see, price float around here and dip down again. And you're just vulnerable to whipsaws and things of that nature as well. So from a trade perspective, when it's very quiet and lacking a catalyst, it's difficult to put together a trade plan. So in regards to the US index itself and a trade plan, I would say what makes sense would be a long, but I just want to wait for some more confirmation. So we didn't really see this carry through, and we discussed this yesterday in the currency call, and it just seems quite happy hanging around the low 92 region until something of substance is, injected back into the markets. And again, Kim Hong went through the NFP and what it meant, and he highlighted some significance on, the NFP number, and it's not as bad as it looks, but really it sort of surprised the market. So I think for now, wait till some stability is resumed and see what the US equity markets want to do tonight as well. The Australian market has been a little bit choppy, but that's simply because of the Reserve Bank meeting coming up as well. So from a trade point of view, downside is probably limited, but really you'd want to wait until, we flush out again, we collect a few stops down at the 91.90 to 91.80, and then another pushback is what I'm, waiting on essentially. But those are my thoughts on the US dollar. And just quickly as well, I'll just go to, you hear me refer to the YouTube channel a little bit. So I just want to quickly share that. So what we do have here, guys, this is the YouTube channel as well. I'll share the link again in the chat. So we've got the 4-day Kickstarter. This is the complete course. Everything is there. And I strongly recommend you, that's the first point of call. You want to watch all those videos. And then we have the analysis from the currency calls, again, posted each day. Then if you don't want to watch the whole thing, we have the breaking news analysis as well, from when Kim Hong discusses any breaking news events. We have the trade ideas from the call as well. And then we have educational videos. So definitely a lot of resources to keep you busy as well. People are in lockdown, maybe review it. You might have seen a few of these before, but now's the time to, have some efficiency with the time you've got and, make the most of it. So up next now is Jin, and I'm just going to discuss the euro pairs and just any possible trade ideas that are around as well. So all yours now, Jin.
Thanks, Scott. So today being Tuesday, looking at the euro dollar, actually it's going to be quite interesting. Why I say that is because as we look at the possible euro news, and I've got one here, but looking at the ForexTradingAsia.com economic calendar here, this week is actually quite a news-heavy week, especially for the euro dollar and also the pound dollar. Why I say that? Today being Tuesday, we've all spoken about the RBA to be released in about an hour's time. Following on from that, we do have the euro GDP number later today at 5 p.m. Singapore time GMT +8. GDP for the Eurozone looking to stay at a 2% quarter-on-quarter, and for the year-on-year looking to stay at 13.6%. So what you should be looking at here, or what you should be interpreting from this, is that we're seeing some consistency from the Eurozone. We're looking at consistency being good news for the euro, possibly good news for the euro dollar. But this is not the main event here. On Wednesday, we do have, the Bank of Canada, which Kim Hong spoke about. I'll tell you a bit more about that shortly. On Thursday, look at that. On Thursday evening, starting from Thursday evening at 19:45 hours, we do have the Eurozone deposit rate facility staying at a negative rate minus 0.5%. The deposit facility is the interest rates for the Eurozone staying at a minus 0.5%. And then the rate decision with the policy statement and a press conference to follow from at 8:30 as well. So pay attention. This will be the main event for the Eurozone, with the central bank giving their insights, giving their thoughts about how they view the economy as a whole and what kind of thoughts and actions they're going to be taking to either adjust by slowing down or adjust by speeding up the economy to, maintain the current performance. So to give you a bit more about central banks, a bit more about the ECB, for FX traders in particular, we pay a lot of attention to what central bankers are thinking about. We pay attention to what central bankers are planning, not so much about the president, not so much about the overall economy as a number, but what the central bankers are thinking of doing, because the central bankers look at the inflation number, which I'll tell you about, and the central bankers look at the overall GDP numbers, look at the speed of growth in the country. So what we're looking at for the ECB here at this point now is, as a news here, that is, will the ECB, is a preview, will the ECB taper bond purchases, right? So cutting through all that, current inflation for the Eurozone is at 3% for August, previously at 2.2% in July. This is the fastest over a decade and well over the ECB's target of 2%. Central bankers want to keep inflation targets between 2 to 3%. So when it gets to that 3% level, it looks like it might be a little bit too fast for the ECB in general, in a broad view, if you're looking at it. But what our view is that the ECB might come out and say inflation now is at 3%, but this could be transitory. This could be short to medium term. They haven't seen this as a long-term number. They haven't seen this as possibly sustaining between the 2 to 3%. So we might see that the ECB will not take action on this inflationary number at 3% or the CPI number at 3%, because they might view it as transitory. Following on from that, are they going to taper? Are they likely to taper? The general talk is that they might look to taper. They might be taking it down from 80 billion to between 60 to 70 billion euros a month. They might look to taper it down, but based on our view, we're looking at it. The main thing here is this vote could be a close call. We think that because the ECB could be looking at inflation as a transitory number, putting that together with not getting entirely out of the woods with the virus at this point, they might hold off the taper and delay it slightly towards the end of the year. So putting all that together, what this actually means is that there could be a good trading opportunity with the news to be released on Thursday evening. So you have a trading opportunity with the GDP number later today. And then after that, you have a bit of a break. You have a good trading opportunity on Thursday evening with the possible bit of surprise coming from the ECB with the possible lack of action, which everyone's anticipating. Everyone's expecting them to possibly, take some action because of inflation hitting 3%, possibly take some action with the tapering. My view, or our view, is that we might see the ECB sit back, wait, let it play out a little bit more and not take action at this point or at this meeting. So after that, on Friday, we do have couple of ECB news again, but these are possibly not big price movers. the attention should shift towards the pound, which I'll tell you more about tomorrow. So what does all this means? Putting it into the chart here, looking at the euro dollar on the H4 time frame. Same thing as I told you last week. Last week I said that we can see that buying opportunity if it broke above towards that 1.1897 or 1.19 level. I'll make this a nice round number. So at about 1.19, that's a very key resistance level. What I think that we could see from this point is if GDP stays, given that GDP is likely to stay at that 2% quarter on quarter, we could see it break upwards. We could see it break upwards slightly. Okay, so that could happen later today as the euro dollar continues moving up. But I think that given the possible non-event from the ECB on Thursday evening, given the possible non-event from the ECB on Thursday evening, we could see that test back down again, because everyone expecting them to taper, everyone's expecting some action from the Eurozone, and if they don't do anything, they're going to disappoint the market a little bit. We could see it come back down. So what I'm looking for at this point is for that reaction towards that 1.19 level. Same thing, looking for that selling opportunity as it breaks downwards from this resistance level. You could be looking at a selling of at about 1.1885, a little bit aggressive, 1.1885, a 30 pip stop loss for a good 100 pip take profit level. You're looking at above 1:3 risk reward ratio, almost a 1:4 risk reward ratio towards the downside. But bear in mind, this is a counter trend trade. This is dependent on the ECB disappointing the markets a little bit without taking action. This is going to be something that you want to manage a little bit closely, size down on your trade, because it's that counter trend. It might not go the full 120 pips. It might come down to about 50 or 60 before sitting and then possibly reversing back up again. So possible counter trend trade. Not sure if it go all the way, but I'm pretty sure that we could see some reaction towards that 1.19 resistance level at this point. So with all that said, there is that news for the ECB coming up. We have the Bank of Canada news to be released as well. What I want to share with you before I hand it back to Scott is that, with this ECOFIN platform that we have for all the Traders Club members, this is where we get into all the details, the quick updates. Whenever I think of anything or I see any trade ideas, I'll put it up. Same like what I did for non-farm payrolls. I did that before the non-farm payroll was released on Friday. Did a quick video guiding everyone through different charts and different pairs. What are the trade ideas? What you could be looking for, what to trade towards, with the view of the non-farm payroll data to be released. So Traders Club members, watch out for the video. I'll be doing one for the Bank of Canada with a trade idea specific that we could be looking at. So Kim Hong went through the data, went through the expectation. I'll give you the trade idea specific. And also possibly on Thursday, I'll do one more for the ECB to be released before the news is being released. So if you're not already on the Traders Club, the links are there. Make sure you jump onto the Traders Club so that you get all those trade ideas, not just this currency call, but all those other trade ideas before the news is being released. With that, I'll pass it back to Scott.
Thank you for that, Jin. And again, guys, that is the link I just posted there for the Traders Club. And speaking of Traders Club as well, I've got Daniel here just to go through how the live trading call went last night at 8 p.m. GMT +8 time zone. And over to you, Daniel.
Hey, thanks, Scott. Yeah, so like I know Jin said, we had the LCMS Traders Club. Really very nice. So on Monday, usually on Monday, 8 p.m. GMT +8, we have a group coaching sessions, what we call trading session, a live call where we actually guide the club members, the current market conditions, show how to identify trades, and we literally can make profits together. So now what we did yesterday was we looked at what happened last week, and how it impacted the currency markets and how it could impact this week's currencies market. And then with that, looking at this week's currency, what kind of news trading we have, we form a trade idea and a decision making whether or not, if there are any active trades to hold or to close the trades, at which point what we see. Okay, so now let's go to the trade. Now let me share with you something that we looked at last night. So there was a lot of trade ideas that we mentioned about it. From Aussie USD, New Zealand USD, like the Euro ECB news, we talked about it as well. Bank of Canada, we talked about that. So we looked at the current market yesterday, and one of the things that we always highlight is that if there is no direction in the market, for example, US yen, I was looking at that, and I would say that if there's no currency direction in the market, most likely we will stay out. So most important, this is one thing I'd like to share here. We can share with the club members. Here, many more other trade ideas, but one of the things we should show that is that perhaps we're going to stay out for the US yen because there isn't a real trade idea. It has the consolidation phase has been real tightened up. So it's really important. Not only do we look for, a trade idea, sometimes we also look for which market do we stay out, right? To stay out in the market. So this is some US yen, unless there's some terrific news coming in, it's going to stay within this range. No, so okay, so I hope you guys could join us in the Monday group coaching call, and also on Wednesdays we have a live trading sessions where literally we trade together. We're getting ready for whatever news that we can trade together, or we can have some trade ideas for the week, and which kind of short-term or medium-term kind of trades that we could be taking in. So do join us there. So again, the trade links is already pasted up in the chat group there. When I would like to share with you that, just go to the Traders Club, lcms.com.sg, scroll it all the way down. This club membership is worth thousands. We've talked about it. Not only do we have the trade ideas, we have group coaching sessions, live trading sessions. We also have Forex trading signals every day where we see the current market condition, what could possibly to be active, to be taking a trade if you like to. And also, we not only give you the signals to earn and profit from it, we also have the analysis behind the Forex signals on why we take the trade and why we issue the signals as well. So you can not only earn, but also learn from the trade. So all come here. It is right now your chance to join at $49 a month. This is without the doubt the least you must do to make sure you achieve your best in trading, right? So this price can change anytime. Just click it in, and I'll see you, on every Monday, Wednesdays, evenings for the group coaching sessions and the live training sessions here. So Scott, back to you.
Thank you for that, Daniel. And guys, I just also sent through the RBA statement releasing today at 12:30 and what to expect from that. That was what Kim Hong talked about yesterday. We've got the link as well for the Traders Club. And also there was a link for the managed account service, ForexBriefcase.com as well. So if you're curious to find out more, please visit that site. Any details, we can reach out to you and we'll get that process started for you. Something that we all recommend that you do just to diversify your portfolio as well. But that is the end of today's currency call, guys, for Tuesday. Make sure you join in for tomorrow's call on the pound pairs. Thank you so much for watching, and I hope everyone has a